Ladies and gentlemen, good afternoon to all. Thank you for having turned out in a large number, which is another busy session in a day that started with a lot of things this morning. I'm very happy to be among you this afternoon to talk about um, a lifeline to doubtful situations. Are these structures going to serve as a safety valve to African banks? To give you more information, I'd like to say that you know that the level of bad loans have gotten up to 3,000 billion CFA francs, and it's about 11% in Kenya, over 8% in South Africa, and high in Morocco, and about 90% in Central Africa on the average, and around 21% in Angola in 2022. If a better level of credit had made it possible to reduce these bad loans, there was good news in the sector of Italian banks, unlike Spain. And in terms of infrastructure and key areas, it was possible to reduce bad debts by aligning banks, public authorities, and other financial institutions. In Nigeria, there was an attempt with the AMCON structure. Regardless, all these structures are very few in Africa. And we're going to be talking about regulations and the increase in regulations given the lack of enthusiasm among investors for that type of tool. And then we have certain types of operations that are in the minds of some people following the crisis of 2018. And then we look at Morocco, that looked at ways of managing bad debts. And in the face of all this, what I'm going to look at today is how can banks capitalize on these instruments for risk reduction. That is why I'm very happy that we have a panel that is very experienced to talk to us about this. Unfortunately, Madam Selem, who is very informed on this matter, is not here. But yesterday, we produced a video in which she gives us perspectives of how securitization operates. So I'm going to ask the system to please give us the theme music so that the panel can start its work.
Ouns LEMSEFFER, I'm a partner at Clifford and co-head of Francophone Africa. Securitization of non-performing loans is today a very hot topic in Africa, and especially since the COVID-19 crisis. If we go quickly to the first slide, it shows what is a typical securitization of NPLs that we typically see on international markets, where you have basically a borrower that has raised a financing through a bank, the originator, which sells these loans to an SPV, which raises financing on the capital markets to international or qualified investors. And with this financing raised on capital market, the SPV purchases these non-performing loans. Let's go to the next slide to go into more detail on this, how this structure can be replicated in Africa. And especially if we look, for instance, in the UMOA region or in Morocco, how the structure could look like. So again, we have underlying borrowers that have raised financing through banks. These borrowers in certain sectors are today not performing because we know that since COVID, a number of sectors have known a certain crisis, like tourism, like construction, a number of these sectors. And today the banks, African banks, are full of non-performing loans. These non-performing loans are undermining the balance sheets of the banks and are preventing the banks from granting new financing to SMEs, to projects, and to finance the economy generally speaking. So the securitization of NPLs is first and foremost a balance sheet product. It's a tool to help the banks optimize their balance sheet. Why and how? And because there are a number of investors, of international, qualified and institutional investors that are very interested in these types of products. So the bank will sell these non-performing loans to an SPV. This SPV takes the form of FCTC, UMOA, an FPCT in Morocco, for instance. This vehicle will then raise financing on the capital markets. This financing will help the fund purchase these receivables. And by purchasing these receivables, usually, and because the banks have these non-performing loans fairly discounted in their balance sheet, and the SPV would purchase them with a certain discount. And with this discount, the international investors will assess how the discount can be interesting because they are purchasing non-performing loans with an important discount, but they have certain skills. They hire experts, they hire servicing companies that can ensure the servicing of these receivables. Often these receivables are backed by mortgages, by real estate, by good quality of assets that the banks don't necessarily value as other types of investors that are keen to take these risks. And by enforcing these securities, they can make a good amount and a good profitability for the investors. So let's go to the next slide. Why do a securitization of NPLs? It's important today. Like I said before, first, it's a balance sheet tool for the bank. We know that in Europe, securitization of non-performing loans have been a lot utilized to enable the banks to enhance their balance sheet because it frees the bank from these NPLs and enable the bank to use their capital, to deploy their capital to finance the economy. In that context, and by reducing the NPL stocks in the balance sheet of the bank, this tool is very efficient because it improves the soundness of the economy and the soundness of the banking system. It frees the bank from these risks. It is mitigating a lot the systemic risk, all that we have seen in the financial crisis. Also, like I said before, it attracts new investors. There are a certain number of investors, a certain class of investors that have appetite for non-performing loans. Again, because they have the skills to hire professional servicing companies, enforce the mortgages, and make a profitability out of these assets. This class of investors is a new class of investors that is not traditionally present necessarily in Africa. It's not necessarily the same investors that are present in Africa for infrastructure projects, for banking and project financing generally speaking. It's a new class of investors that are really keen to invest on NPLs. Also, the sale of NPLs is usually done at a material discounted price. And if you look at an international benchmark, the discount can reach between 60% and 80% of the nominal value of the performing loan. And finally, it's an efficient tool in a distressed environment. So in a context post-crisis or in a context where the states, African states, are heavily indebted, it helps also to free the banks, help the balance sheet of the banks and enhance the liquidity of the market and the possibility to have new financings without the state guarantee. again by attracting a new class of investors. And last slide, which is, I believe, is very important, the last one, is really what are the legal issues that need to be considered under local law so that the securitization of NPLs can be deployed in an important manner. First, and this is a very good example of what Morocco has done, in 2013, we've made a huge reform to first enlarge securitization to a number of underlying assets, not only receivables, but also real estate, etc. But with respect to receivables, we have set a number of provisions applicable to non-performing loans to have certain carve-outs from the classical provisions that apply under local law and that we have in many civil law countries, for instance, because when you transfer an NPL, often these NPLs are before court, and it enables the debtors to oppose the sale, or what we call the droit de retrait litigieux. They have a withdrawal right to pay the court the discounted price to extinguish their receivable. So we have deactivated all these rules from the civil code that do not now apply to NPL securitization. We have also provided for that there is no borrower consent, and these also permit to have a smooth transfer of an important amount of NPLs, portfolio of NPLs, without searching for the consent of each individual borrower. Also, the collateral. Collateral is very important because these NPLs are often secured by an important amount of collateral, real estate mortgages. So the loan must provide that the transfer of collateral is automatic. There needs to be also the possibility for the fund to become the owner of the mortgaged asset, not necessarily go before at auction to optimize again the value of the enforcement. Tax and forex also are very important in a continent where there are foreign exchange control regulation to enable the setup of securitization vehicle with different type of investors on a regional basis and on a continental basis. And what we have now today in Morocco, it's a very efficient regulation. We have a regulation which is fairly similar in UMOA region and which must be deployed. And on this front, I strongly believe that the capital markets regulators have a huge role to play to incentivize these products, encourage banks to transfer these receivables while having a very secured transaction, because the regulator ensures the transparency of the information in the note d'information, and the law provides for a total security on these transactions, which are reserved to qualified investors.
All right. Merci à Ouns d'avoir fait cette.
Thank you to Ouns for having made this magnificent presentation. Without further ado, I'm going to invite members of the panel to the podium. I'm going to start with Mr. BOSSOUKPE, Secretary General of AMF-UMOA, followed by Mr. Mohamed Field Capital Real Estates, followed by Mr. Ababacar DIAW of Impact Securities, and finally, Mr. Paul THIEBA, PCR of IB Bank Togo. I'm going to join you. Hello. My first question is to Mr. THIEBA. You have a microphone on the table. You are the PCR of IB Bank Togo. Non-performing loans get up to 8% in Togo, and here we're looking at the difficult macroeconomic scenario that these banks are operating in. What can you tell us about the impact on your solvency, profitability, and so on? Hello. Yes, thank you. You've said it all. As presented, when the level of NPLs, as they are referred to in English, when they increase in a bank's balance sheet, what happens is that immediately it impacts on the prudential ratios. There's also the issue of liquidity, which reduces significantly the capacity of the bank to make credits available, new credits and so on. And it has a microprudential impact as well. And as said, banks cannot give loans. It also impacts immediately on the bank's profitability because the bank cannot make enough provision. So from a microprudential perspective, it impacts on the loan, and NPLs impact microprudential levels, because if you look at the monetary union, if the accumulated amount of NPLs attains a certain level, it could compromise financial stability. Within the UMOA zone, as you said, we have a level of NPLs 8-4 against 6-4 in previous years. But it's still a source of concern. We are not in the same scenario as 1980s, when the banking system, at least in the UMOA zone, was in great difficulty as a result of NPLs from private sector. I remember I had just come back from abroad, and BCAO, the West African Central Bank, was compelled to effect the first securitization of UMOA. What happened? They bought the NPLs from UMOA banks, and otherwise all banks were bankrupt. So BCAO bought off all of these bad loans and against cash, and so gave them succor. But since the central bank could not afford to keep all of these securities, well, they securitized them. At that point, I was part of the team. I had lawyer friends. In any case, it was a BCAO in the 90s that made us to issue securities at a fixed rate for a number of years, and this made it possible to save the banking system in the UMOA zone. So the issue that has been raised could have microeconomic consequences for banks and also lead to instability at regional level. So we have to look for adequate solutions, because once there's a high percentage of NPLs, it's either that if it will affect microprudential systems. I'm going to ask you a second question, because you raised a point that has to do with liquidity in banks and so on. From your point of view, why is there this issue of mechanisms for de-risking? It's a question of culture. You know, if you look at all these mechanisms, I'm not saying this to look down on anybody, but it's a reality. The instruments we have for de-risking are new, and most of us are not very familiar with it. So we have a whole range of teaching to do. Stakeholders in the financial sector, banks, financial institutions, and regulators, stock exchange officers, everybody has to play its role. That is why new financial techniques such as securitization, especially the possibility that banks have to use this technique to make their balance sheet lighter, and therefore use securitization as a dynamic instrument, means that regulators have to learn to use it as a dynamic instrument to resolve the issues. So I think it has to do with culture, education, habits, and the knowledge. Thank you. Thank you, Mr. Portibai. I understand what they're saying. So it's an issue of spreading this mechanism. Mr. Ababacar, are we not looking here at banks having issues with preserving securities and preventing them from dropping to NPL levels so that they won't have an impact on own resources? Because oftentimes you go to the central bank. What do you say to this? Thank you, Rama. Please don't create problems between myself and my banker friends. But I think that the issue is the issue with every financial instrument is to see, first of all, I mean, why was it necessary to have the instrument? I think that today we have seen quite a number of securitization in many European countries. It's because most of these banks have an international rating that they have to use to obtain the best conditions for financing and for financial rates that are the raw materials. I think that for us, we don't yet have this compulsory scheme of ratings that is likely to have an impact, a net impact on availability of resources, so that somehow securitization is a need, but it's not a pressing one for some banks. On the contrary, another point on which constitutes an important topic is that today we still have quite a number of tools that banks can avail themselves of in order to manage the loans. Because what is important here is that the needs of the continent that makes it possible, that means that we have to have a strong financial system to be able to address the continent's needs. So the more a bank is capitalized, solid, and then we could then be led to be in a position to manage NPLs. Thank you, Mr. Jallo. I share your views completely. I think there are personalities from the West African Development Bank who are here, and some weeks ago they launched their securitization, and the fact that he wants to preserve his rating is the reason why he is looking at securitization. And this is happening at a time when we want to have a de-risking scenario that is very low. I don't want to give you economic theories, but ratings makes it possible to reduce the risk of asymmetric information, because for as long as we have banks that want to raise resources from the zone or another African zone, reference was made to the interconnectivity of stock exchanges. which, for instance, would make it possible for UMOA banks to raise funds anywhere on the continent, and therefore reduce compromising information, because, among other things, it could lead to other advantages. That is, it will show that NPS can be better managed. Yes, Mr. Tibak, because I wish to say, first of all, that what my brother Yao said is important. I was lucky to have participated in 1988 to have had dealings with French banks. So the discussions that we had with Standard & Poor's and Moody's made it possible for us to sit up. Because when they came, we spent months and months speaking with the Moody's and Standard & Poor's teams, and they looked at the procedures one after the other. And then they looked at what we're doing and said, look, if you maintain this option, you will never have the AAA that you are looking for. You could have AA. So that we were compelled each time to improve our procedures, improve on guarantee mechanisms that we were looking at in order to be able to attain the grade that we expected. That is how come we moved to AAA through Standard & Poor's and Moody's. People shouldn't be afraid. UMOA should not be scared of them. Banks should not be scared, because the dialogues that we had with these rating agencies made it possible for us to improve our procedures, improve on our ratings, and generally have the best results. And also procedures that reassure everybody on the market. Yes, reassurance, trust. Those are the key words. That is the perception that external investors have is important. So on this call, I would like for us to look at Ouns' opinion, and she was able to reach us on this matter.
Like I said before, the NPLs have negative consequences on the balance sheet of the banks. It exercises a huge constraint on the banks, and it exacerbates macro-prudential risks and systemic risks. So by freeing the banks from these NPLs, you increase the credit supply to companies, and you take the opportunity of selling these NPLs to a new class of investors that are really professional. It's professional investors. So there is no risk of spreading these risks in the capital markets or to retail investors like UCITS, etc. It's not for this type of investors. It's really for professional investors and that are keen to invest. And the African continent is at the momentum today that it's innovating a lot. We are seeing project bonds, we are seeing a number of innovative tools, and NPL securitization is a new one, and it offers a number of opportunities to attract liquidity on the continent.
Voilà, vous avez la position, en tout cas
the Ouns' vision or position with regard to the opportunities for liquidity and NPL is what you have just heard. Mr. Mohamed Wad, with regard to the first key consideration, that is with regard to investors, you have listened to Mr. THIEBA, and you're always trying to get across to investors. And there are some investors who are very much interested in litigation funds and NPLs. Ababacar and Mohamed, what is the appropriate guarantee structure that can be of interest to investors? What do you think? I think that with regard to this question, there are two aspects. First of all, you're looking at the basis of inspectors. I think the first need that we require, which is going to partly answer this question, is to enlarge our base of investors, because I think that if we only looked at only international investors is not a very good thing, because we need not only to have institutionals, but also the entire population, and then look at the types of instruments that you're going to make available to them. Then you have to increase the base to include zones outside in the continent, as we're doing, because I think that is very important when we're looking at NPLs, which, as the name says, are non-performing loans. So this is well, these are concrete risks. So it is important, I believe, to find a scheme that is going to create an alignment of interest, and therefore interest investors. I'm an investor. I have a wide range of products. Why should I go to NPLs where there's confirmed risks, whereas I have conventional commitments and so on? I think the first thing to do to resolve is to look at the aligning and look at the possibility of the trenching, because it's going to result in two things. First, we are going to enlarge the base, and then remember that all our habits are not the same, or interest areas. There's some investors who are not really interested in loans, because this trenching will make it possible to have a large base. Secondly, it's going to lead to the alignment of interest, because when you have an NPL structure, it's going to make it possible for there to be a scheme where one is going to say, no, I'm going to do this, and then pass on something negative to you. The second aspect is that with regard to the management even of this structuring, there's a moral issue. If I, as a stakeholder, knowing that I had contracted a loan which doesn't have a risk, of course, I may not want to reimburse. So, and this leads to some of the ratios that we find in some jurisdictions. Some of these ratios are very low because it could mean that the banks are playing a role in this recovery. There's also another aspect when it comes to this restructuring, to have a scheme where the entity, as I'm coming here to servicing, where these servicing agencies which we don't really have this in our zone. Mohamed is going to correct me or complete what I'm saying, but it could also be a good link as an incentive that is required for things to be done well. I think this kind of restructuring is important. I may have to stop with talking about the capacity to going to the highest international standard. Of course, we have seen quite a number of entities who could come to our type of risk, but require to be in a scheme that is responsive, that is standards that have been tested and makes it possible for us to have a market. Last but not the least, risk that correlates to profits. So we have to enlarge the base of investors. We saw this yesterday even. And Mohamed, I'm going to ask you a question. You manage assets. I'm going to ask the same question that I asked Ababacar with regard to structure. So once they are securitized, and then we have movable assets that can be managed locally. Now, I'm going to ask you about the structure and what is the constraining you from securitization. Thank you. We we manage manage fixed assets. You know, we manage for insurance companies and banks. And with regard to banks, what we manage are fixed assets, NPLs. Here, banks could work through legal systems to get what they had mortgaged within the framework of a loan. That is, these mortgages are transferred to them, and then there's also the possibility of using the law to make the borrower transfer his assets willingly to the bank. Of course, this is what happens with NPLs. You have them, and banks can work towards using them, transforming them into fixed assets. Until 2020, banks were not really keen on that scenario, because there was a huge amount of resources available that were not used to finance the economy. So that is when the central bank decided to change the rules, and indicated the amount of resources that you could keep in your banks. And then the regulation said that anything that was higher than 15% had to be deducted from your own resources. And these assets that were idle were not financing the economy. So what really did it mean? It meant that there had to be regulation on the market, because today the securities are used to raise funds. And of course, we should be able to make more progress on this. And the second thing is that, and this relates to what previous speakers had said, there have to be incentives. If you start transforming NPLs into fixed assets, well, you have to be prepared to be realistic about it. So it means that banks find themselves at two extremes. That is, sometimes they transform bad loans, non-performing loans, into fixed assets. Now, once it is higher than the value of the market, it's going to impact their resources. So this is one of the constraints that banks are facing. Beyond so we have regulation, we have impacts on funds, and then we have small investors. But we could say that investors are more interested in available resources. So with regard to a bank converting a non-performing loan into a fixed asset could have its advantages. Thank you, Mr. Ward. My first question to Ari, what would you like to propose? Yes, with regard to what Mr. Ward has said about fixed assets, I'm going to go back a bit to be able to comment on some of the points that were raised by those who spoke before me. Already, to identify the source of non-performing loans. Why do we have them? It's because it's either that there's an issue with loans that are not suitable. that is a bad practice within financial institutions. You don't look at loan documents, don't look at the quality of the borrower, or we could have the bad practice of managing risks. Of course, the central bank has stipulated ratios. We've been asked to watch out that we shouldn't concentrate risk in one individual or under one activity or just one signature, but we don't comply with that. We could also find ourselves in a scheme where the economic situation is a problem. So we have external shocks which affects the capacity of borrowers, be they households or corporate bodies. So it's a general problem, which means that if it's a general issue, it goes beyond regulations, it goes beyond stakeholders, and requires intervention from the state even to salvage the situation. That is looking at how to have a structural economic change or face excessive indebtedness. You said that in UMOA we are 8%, but you have to look at the context. What happened before? Do not forget that we are coming out of the banking crisis of the 1980s. Of course, we had devaluation, and when you look at that, happened in January 1994, and that was when the new OADA Act relating to the rights of commercial entities and the limits where corporate bodies had a ceiling, and then the marketing authorities were created around the same time, 1996. So these condition the environment. Therefore, we are compelled to have careful management. Today, no regulator, even if the regulator has to manage risks and create opportunities, no regulator wants to have a stock of high non-performing loans, because this would lead to crisis if they're not properly managed. So these are the comments that I'd like to make to put things in context. And then there have been two criticisms concerning the regulator. They say that the rules are restrictive. So we have to, there's need to align regulating to align with international standards. Regulations look at attaining an objective. So if we want to work at using NPLs as a market instrument, we shouldn't only be looking at regulations. Regulating wants to draw attention to the responsibility of stakeholders. There has to be transparency. What is regulation? If the management of the banks have not been, observing best practices in granting loans, why should they offload this problem to another person? So we have to look at how to find a solution, because the regulator always finds himself between having to make stakeholders do the right thing and not also allowing the ceiling to fall on stakeholders. Now, if we should look at guarantees, I think Ababacar started referring to them. So what do we do if we have non-performing loans and we go to the market and we want to, activate NPL markets? We have to work on internal dynamics first of all. If I have NPLs, I'm going to be telling you, I need to know what I have in front of this NPL. First of all, I have to look at the capacity to bring guarantees to counter these NPLs. That is when it's going to be interesting to investors. Now, apart from this internal mechanism, we want to look outside, then we have to look at the environment. And in the environment, we have to look at the possibility of having external organizations like insurance companies who are going to come and subsidize these risks and transform them into attractive facilities. Now, another determining factor for the investor is even the legal environment, because here here is the capacity to implement this guarantee or mechanism. So this is going to look at the legal system. Today, do we have business tribunals? These are the or trade courts. These are the questions that are going to be asked. And beyond the legal system of guarantee, if the markets authority can be called into question, well, then we'll look at the quality of debts that can be used. Can we today have a debt system that is fluid enough? We have to look at what the law says and what the regulation wants. How can we transform the instruments, make the instruments give us liquidity? So it's for us to look at these things. If we want to open a market, how are we going to articulate what the commerce laws and ordinary laws are saying? And finally, we have to look at the scenario of if we're going to open this kind of investments, what kind of markets are we looking at? So each time we have looked at each of these factors, we can say, yes, okay, we can have an NPL market that responds to this objective and the type of this type of investor. These are the points I wish to raise, or these are some of the suggestions or some of what I want to say concerning what has been said by speakers. So the Italian NPLs, which constitutes more than half of European NPLs, was one of the had faced some of these problems. I'm going to ask my dear colleagues here a question. What regulatory instruments or adjustments are you looking at? Before he answers, because he's going to give me proposals and I'm going to be listening. Before he starts answering, I forgot a point concerning the effectiveness of the tool. We shouldn't forget taxation. I mean, if we're going to transfer NPLs, and at what rate and so on. So I'm going to ask the questions. What regulatory adjustment is required to help banks? I don't want to bore my colleagues. And why do you use the wet? You said, no, don't speak like that. Regulators help us. I think one of the points that was raised, and which I think to be very important, makes me say that globally, we said this morning during the first panel that securitization is an additional channel that is being added to what had been available. Now, if beyond the securitization of NPLs, where we looked at securitizing assets, it could change something. And I think that these elements, we should look at how these elements are possible. But then it's also important for us to know that if we're referring to a qualified investor, we're going into the market with a financial culture that is not very, very developed. So we should have we must look at having quite a number of choices when we're looking at securitization, and look at what is happening in other markets and how they can solve they solve the very complex challenges. Well, going in the same direction, I think we in our region we like to blame the regulator, but the regulator has protected the market and investors. Of course, we may not be in agreement with the choices the regulator has been making, but we must know that without the regulator, there will not be a market. Having said that, it is important for us to have a dialogue, and I think AFIS is a good context for us to have this dialogue between the investor and the regulator. Today, we're looking at banks. The regulator of banks is the central bank, and some decisions that are taken in the central bank have consequences for banks. And I'm saying that when we pressurize banks to have for you know, usually we look at fixed assets. So we put in place a rule that says that a bank cannot keep its fixed assets, has to be liquidate, you know, has to be monetized. So we have to see if instead of asking the bank to cede its fixed asset, we could have a dialogue. So the a fixed asset is a lesser risk than NPLs. So I mean, if when we invest, we also, you know, what the regulator does is go into the bank's books and see how best to protect the investor and other stakeholders. Well, I discussed with Mr. THIEBA and had discussions with him about, because, well, you referred to securitization as an alternative to ceding. Well, if you look at the origin of securitization in the United States, you will discover that it came about as an additional instrument to what had been available, because banks did not have enough resources to push loans to 20, 30 years. So the regulator put in place this instrument with the guarantees of the federal agents, and that the loan could now be made into an investment. So that is how come you had a boom in fixed assets. So as my predecessor said, there is no contradiction between the regulator and professionals in the market. We have to work together to attain the commonly desired objectives. Today, everybody is aware that within the 8 countries of UMOA, when you look at the structure of credit, you are not going to find a long-term credit. The longest type of credits, the lifespan is 8 years, 7 to 8 years. In any case, it's very difficult for average civil servants or average salaried persons to be able to finance a housing loan for just 8 years. Of course, we have to, we need to encourage what was said this morning, that is securitize banks, because this is what is going to make it possible for the banks to be able to put housing loans on the markets, and that is what is going to make us more dynamic. So we have a lot of work to do here. I think that with regard to guarantees, we have seen in European countries, and through the prism of the the banking crisis, that we noticed that Italy on its own, you know, within the Eurozone, had a huge NPL. The Spain, the same thing, and it created a really big problem for non-performing loans. That is why guarantee banks were created as counterparts to securities that were issued. So, this kind of scenario was vital. So I think this is how we should work. We should work together, regulators and other stakeholders, and we should work together to solve these issues. Even if we have to put in place guarantees, mechanisms, we should do this. It was done in the US. Why can't we do it here? Today, I'm looking at the banking system here in Togo. No bank can give a housing loan over 20, 30 years. It means that all those who don't have the resources cannot have houses of their own. It's only securitization that can help resolve this problem. Thank you, Mr. THIEBA. To end these discussions, I would like for us to watch Ouns's video one more time.
Of course, the regulators are key to develop these products. These products cannot be developed without a suitable legal framework. So if we take, for instance, the example of what Morocco has achieved is a comprehensive and very favorable legal framework, as was done with the Moroccan securitization reform in 2013. In this reform, we have provided, as I said before quickly, an exemption on borrowers' consents. You can't have a development of a secondary market for NPLs if you still have these civil law constraints with borrower consent. Banks must be allowed to transfer a huge amount of NPL portfolios on several debtors without their consent. And enforcement of collateral must be also simplified and must be automatic. The transfer of collateral should be transparent, should be automatic, and should benefit to the securitization vehicle without additional tax. That's very important. In certain jurisdictions, the regulator asks the bank to retain a minimum retention requirement, like 5% or 10%, to keep the bank incentivized because it has the relationship with the borrowers. This is not the case in Morocco. It is the case in Europe. This is an area that can be explored and can maybe also lead the banks to stay involved at a minimum, at a very minimal level, like 5 or 10%, but while freeing their balance sheet and allowing them to finance new borrowers, new projects, and not stay constrained with these balance sheet requirements. Thank you.
Merci à Ouns pour ce point-là.
Ouns, thank you. I think we all agreed that the regulator is necessary, and he has to work with bankers. And I'm going to end with these points, and then after which we'll look at taxation, fiscal issues. I'm going to start with you, Mr. BOSSOUKPE, and I wish for each one of you to give me his views. If we don't have historical data, what can you do with bad loans? Well, you have to read the market. You have to have a reading of the market. You may have to construct, and I'm going to repeat very quickly. I'm going to come back to something that is very quickly that Ouns said. I think it could be interesting to support the supporting mechanism by having a loans register, and that is going to be made available to everybody. These could kick off a lot of interest. So investors are looking for what the values to attach to these assets. So we have to work with stakeholders. We have to look at the assets. They have to be zoned. There has to be zoning in different regions. We should have the price per square meter, and so on. These are the parameters that will make it possible for the investor to have a closer idea of values. I think we have this combination of mechanisms will have make it easier for us to have an index on the markets. I understand what you're saying. You will, mention has been made of open banking and open data. What do you say? Because there are quite a number of things. It's true, I'm a regulator, but there are things that the banking regulator has to do and which the market regulator has to do. It's true that we have channels of discussion. We have the secretary, the general secretariat of some of these types of things. We have transversal systems in UMOA and BOSSOUKPE, but the banking regulator is looking at prudential ratios, and the market regulator is looking at another component. So if we want to work together, we have to look for other elements that is going to make it possible for these two stakeholders to work in harmony. With regard to real estate, what we have observed in banks and so on is that the values that we have from experts, real estate experts, it is not always consistent, because many times the bank presents the fact that it has real estate that has a particular type of index. But when we get other valuators, professional valuators, we have a different index. So institutional investors are those who undertake the most transparent real estate, because usually when this institutional does this, you can be sure that in reality he has to be 100% sure. So if we can create instruments that makes it possible for institutionals to have liquidity with what they have, it's going to further enhance transparency, and it's going to make it possible for us to have more profound discussions on how real estates can have a big role to play, because after all it could have a positive impact on real estate markets and banks, because real estates that are going to be put up as guarantees will be taken seriously. So transparency is very important here. Well, I agree with all the previous speakers have said. Well, when you look at non-performing loans, we have to look at the global valorization. That is, we have to look at the various options that the banking products that are available. So before we get to the valorization of real estate, we have to look at other things. We have to look at the scheme of fairness opinion, because if you are looking at an asset that doesn't have a market value, we have to look at a valuation scheme working with an expert, because this will make it possible for there to be a market value that is known. And another thing is that if you should, for instance, look at non-quoted assets, that is capital and so on, this makes it, we have to be sure that we apply professional valuation. So I think that in future, the market that is going to come up in future will lead us. When we look at all these considerations, we're going to end up with a real estate market that is convincing and sustainable. Well, the talk of fiscal issues. I share the point of view that was expressed on this matter, but it gives me the opportunity to say something else? No. Okay, thank you. I don't have any more points to add. I think we have come to the end of this panel because we can speak for hours and we cannot solve all the issues. But I think what we need to do is to increase securitization. Banks have to improve on their risk profile. They have to diversify their risks, and then of course it's the regulator has to work hand in hand with banks, and they should share data. I think we can start. We should start, and then I think that in the context that we find ourselves today, securitization, we have to take the opportunity of this difficult macroeconomic situation and do as best we can to help investors and other stakeholders to securitize these assets. Look at cash ratings. The issue is vast, but I think that in 2024 we're going to have more on securitization. Thank you very much, panel. And please, let's all go to the plenary session to discuss more on this issue. Thank you, everyone.